How's it going, everyone? Mario here. What an amazing week we had. Nasty, but amazing nonetheless. Markets gave a pie right in the face to every single person who's been touting about inflation is peaked, bro. I don't know how many times these idiots are gonna try only to fail over and over. In our last few videos, we have mentioned inflation is not something which just goes down just like that. We need Federal Reserve to bring down and hammer in order to bring down the inflation at this moment. We are in a scenario where you take one step forward and take two steps back. We have seen this scenario play out multiple times in multiple CPI reports. One CPI will come out weaker than expected, and the next CPI, whatever the sectors that showed weakness in the previous CPI, will be the ones which are leading the pack. Absolutely insane. And you should have seen the arrogant optimism from the investors leading into the CPI events. The option flows were insanely bullish. The price action was pushing higher and higher. The amount of calls which has been bought into the CPI was really high. All these scenarios made the risk to the downside pretty high. The shock factor was all it took to bring down the markets. We had one of the worst sessions since 2020. The COVID crash was first, and what we got on Tuesday was right next to it. This comes to show that the level of risk management you need to have before leading into these types of events. All it took was one day to wipe out almost 1 week of gains what we had on S&P 500. But hey, in my last video, I gave you guys a clear-cut plan. I told you guys I had a bullish thesis and I had a bearish thesis. Anything under SPY 400, I am not bullish anymore. Under 400 we had the 390 level, which was pretty important, and they just hung around there for a while, for another day or two, before breaking that down and then pummeling lower. So now, I'm not bullish, but that doesn't mean we won't be getting a bounce anytime soon to run a test to this 390, 397 or 400 levels up north. We will go over in detail on what to expect leading into this week. Anything under 400, I am not bullish. And I need the price to get back above that 403.50 or 403.75 and change in order for me to even consider being bullish anytime soon. That being said, we will go over the charts of S&P 500 and we will see what to expect leading into this week. We will go over the bull case and the bear case as well. So first things first, last week price action was terrible. Weekly close under 390 is not something which the bulls wanted to see. That doesn't mean we will just go lower in a straight line. In a normal garden variety market conditions, it is pretty common for the markets to come back up to run a test to the previous support levels and then get rejected over there before making a new low. In our case, that level is sitting at 390. So it won't be unrealistic for SPY, regardless of how bearish it is, to come back all the way up to run a test to that 390.33 levels before taking a turn to make a new low. That being said, if we break above 390, we have another point for which the SPY might gun towards. You see this trend line from June lows? It is always a possibility that in case of a bullish week, by bullish I mean like dead cat bounce, in case we have a massive dead cat bounce to the upside, we can go all the way to the upside to run a test to this trend line which has been acting as support multiple times on this downtrend. That trend line is sitting at somewhere around 397 and change. As I said before, it is pretty common for the markets to do this. Go all the way back up to run a test to the previous support levels, get rejected, and then come back down again. They don't have to do it. I gotta make a few things clear. I'm not telling markets what to do. We are expecting this to happen because there's a high probability for this scenario to play out. Let's just say we have a bullish Monday and the market price goes up all the way to 390 on Monday, and then like on Tuesday we have a continuation to 394, and then Powell comes out with the 75 basis points, and then the market pushes all the way to 397. And this is the point where you will see all the bulls getting all gassed up, saying that, oh, this is just a bear trap, we're going to push higher. 397 is the trend line from June lows. We will get there, and then price might get rejected there before making the new low. Just because we push higher all the way to 397, nothing is bullish. We are still in a downtrend from that August 26th highs. Nothing screams bullish from a price action point of view. As long as SPY is under 403.75, I am not bullish. If we break above 403.75, we can take it from there. But as long as price is under it, I am staying bearish. Every single bounce at 390 or 397 has a high probability of getting shorted back down to the ground. So to the downside, if we do go further lower from these levels, the two main price points which you need to watch out for is that gap fill at 378. There is this 380 zone, and if they break under 380, there is a small gap to be filled in SPY at around 378. Breaking under 378 opens doors for 374, and under 374, 370 will follow. Under 370, watch out for 368, and all the way down to that of the June lows. So this is the plan for this week. As long as price is above Friday's lows, there is a high probable chance for SPY to run a test to that 390 levels, and about 390, watch out for that June lows trend line, which is currently sitting at 397 and change to follow. If they get rejected over there, and if they break under Friday's lows, watch out for 380 to follow. Breaking under 380, there is a gap to fill at 378. Under 378, watch out for 370, 378, and 370 to follow. So, and anything under 370, numbers will be updated on a real-time basis to the members of the Patreon, members of the Discord. Go ahead, check it out. Link is down below in the description. That being said, take high probability trades, manage the risk wisely. I'll see you guys in the next one.